3, 2, 1.
Check it out.
All right. So, like she was saying, I don't know how much heads up she gave you, but this is basically just going to be a introductory to futures. So, there, if you know how to trade stocks or if you know how to trade futures options, you can trade futures. Um, every strategy that you can use in an options or a stock platform is carry over can be carried over one to one to futures. And in fact, a lot of strategies actually work better on the futures market because there's more data points in which to pull your resources from. And we'll go over that in a little bit. But this is just a quick little glossary of what's going to go on. I'm going to go over what a future is. I'm going to show you a chart, which I highly recommend you guys screenshot it, or if not, I'll just upload it into the servers. I can save it from there. And then, pros and cons versus options, because from what I'm aware, at least, most of the people in the server are options traders. So, all right.
What type of beverage do you want?
Squirrel, can you mute yourself, please?
Let's see. I don't think we can do it this.
Thank you.
All right. So, first and foremost, what is a future? A future is just like it says here. It is a derivative contractual agreement to buy or sell a specific commodity, asset, or security at a set date for a set price. Now, that's just a very complex, wordy way of saying that it's a promise to buy or sell. Just like an options contract is a promise to buy or sell. The primary difference with a future is you are executing a promise to buy or sell a commodity. For example, if you have a buy order on the silver future, you are entering into a contractual promise to buy 5,000 troy ounces of silver. Now, 99% of futures traders will never actually execute that buy order because they'll have closed out their position long before. But this is a key thing to keep in mind. All futures have expiration dates, just like options have expirations. If you are holding a buy order for silver, when the expiration hits and your contract expires, legally you are now on the hook for $89,000 to $90,000 worth of silver. Same thing with gold, oil, whatever. All right. So just a couple basic terminologies. First off, we have con, C-O-N. That's just contract. All right. This is the exact same as with an options contract. So one con of a futures is a promise for 100 shares or 100 units or whatever your trading increments are. And then we have ticks and points, which will be explored a little bit further later. So every future asset runs on ticks. So in this example here, ES, which is the SPY futures, ES mini, has 4 ticks for every 0.25 or every 25 cents or every 1/4 of a point. Crude oil, for example, moves in ticks of 0.01. Then you move on to the points. So ticks make up the points, and every future moves in points is what kind of like what you see on the chart. So for example, the ES mini future is paid profit and loss in ticks, but every $1 you see is a point. So if you have let's say you have a position in ES, the SPY future at 4,000, and it goes to 4,100, SPY future has now moved 100 points. Like I said here, rollover, that is when you're coming up on the expiration of a future option, you have the option to do what's called a rollover. This is rolling it over to the next month, and this is important because every time your charts come up towards the end of the expiration, you need to roll those options over, or you have to roll those futures over in order to keep up to date data. So some brokers will automatically roll it over, some will not. Trade I believe, automatically rolls it over. Trading View, I believe you have to manually do the rollover. Each month has its own designator, which is how you can tell what month of expiration you're currently in. So right there, it's January is F, February is G, etc., etc. For example, at the time that I created this, ES, the futures, is technically called the ESM, which means we're in that particular expiration bracket, if you will. And then that's the website right there. I would recommend saving that because that website will always show you what the current or the upcoming rollover date is. All right. So this is another sheet that I'm going to put into the chat because it's super important. I actually have this printed out, excuse me, and taped on the wall next to my computer. So this is a breakdown of all of the major future indexes, and it shows you their ticker. It shows you what they replicate. It shows you the tick sizes, the dollars per tick, etc., etc. So if we just go off of the top here as our example, S&P 500 has two futures associated with it. It has the ES and the MES. The ES is the mini, the MES is the micro. They both move in 0.25 tick sizes, but you can see the price per tick is substantially different. For the mini, every 1/4 of a tick is a profit and loss of $12.50. That same move on the micro is a profit loss of $1.25. And you can see why you have to familiarize yourself with multiple futures, or keep some sort of cheat sheet, because it varies widely. So the Dow Jones, minimum tick size 1, $5 profit and loss. Dow Jones Micro, same tick size, only 50-cent profit loss. And then you can go all the way down here to something like silver. All right, it's a 0.005 tick size at $25 per tick. So just imagine how much that is on, say, a $10 or a 10-point move. All right, this is just a couple examples here. So we already know, like I mentioned, when futures move in ticks and points versus stocks that move in dollars or cents. They're essentially the same thing, but they're not exactly the same. As versus options, which is dollars and cents as well, but then, as you know, you have your Greeks tossed in, which is going to affect the outcome of a contract. So I like to consider futures to be kind of like that middle ground, right, between stocks and options. With stocks, if you go in If you buy a stock of something at $1 and it goes up $1, you've made $1. If you buy an option, you have to really know those Greeks and you have to know the theta and all that, because those can drastically affect your profit and loss outcome. You know, a $2 move could be a difference of anywhere between 5 to 20% or more, depending on what kind of strike you get. You know, if you have a 0 DTE option and SPY runs $2 all of a sudden, you know, that could either be 100% run or it could just completely blow your entire entry. It just depends on what kind of entry you took. So here's an example down here. So let's say you open one contract of the ES mini future. Keyword is the mini, not the micro. Due to the leverage, your trade requires $500 to put on. Now, like I mentioned here, this varies by the broker, and this is what makes futures kind of that middle ground between stocks. So if you buy one share of Tesla at $500, it's going to require you $500 capital to enter. If it moves to 505, you've made $5, right? Now let's say you take that same 500, which for Tradeovate is the minimum amount required to open one entry on the MES future, right? So you enter at 4,000. The MES future is at 4,000, and you put that $500 in there. ES moves 1 point, not ticks. It moves 1 point to 4,001. Remember, one tick has 1 point has 4 ticks. So now you've profited $50 off of that $500 as opposed to $5 off the Tesla. And that's because of the leverage that it gives you. All right, so a couple of the pros and cons. So futures can provide substantially faster profits than stock because of the leverage that we just talked about. But on the flip side, it can also offer equally fast losses. And I have a quick video that I recorded of a trade that I took. It's a couple of trades that I took on the FOMC last week, and you'll see why I say that. They are, however, more consistent and predictable with your P&L ranges. You know exactly how much you're going to profit and loss based on how far it moves, which is, you know, better versus options, because if you get that IV push or that IV crush, you know, it can change exactly how much you're going to make. There's no theta burn. There's no Greeks associated with it. You can hold a position for a year and a half if you want, and it's not going to affect you in that way. You're able to capitalize on commodity markets. So this is what you do. This is what you trade if you want to like take advantage of the oil market for you know, if there's a war coming on, or you get news that there's a chip shortage coming out of China, so you want to short the semiconductor market, stuff like that. The biggest thing is that there is no PDT rule. It doesn't matter how big or small your futures account is, you have unlimited day trades. The minimum amount to put on a single trade with the SPY micro future is $50 per contract. So theoretically, you can trade all day, every day with a $50 account. We have a lot more trading hours as well. So obviously, we're used to trading the standard New York session, which is, you know, 9:30 to 4, not counting aftermarket and after hours and pre-market. However, futures actually trade 6 days a week, 23 hours a day, because it affects a global market. I don't have it broken down here, but somewhere, I'll see if I can find it, I've got a chart that shows at exactly what time of the day it overlaps into what market of the world. There's the New York session, the Australian session, the London, I think the China session, and I think there's one more too. And here's just a little chart that shows you the times. So it runs from 6 p.m. on one day, on Sunday, to 4:15 p.m. on Monday. Then it takes a short break from 4:15 to 4:30. Then it opens back up 4:30 p.m. on a Monday until 5 p.m. that Tuesday. And then it takes a break from 5 to 6, and then it starts back all over again. Tax-wise, it offers a substantial tax benefits over options as well. So futures goes off of what's called the 60-40 rule, meaning that 60% of your profits are taxed at the long-term capital gains tax versus 40% of your gains, which are taxed at the short-term capital gains tax, as opposed to, say, options, where an options contract is always going to be taxed at the short-term gains unless you've held that option for more than a year. Same with stocks. If you hold a stock position for less than a year, you're going to be taxed at the short-term capital gains tax, which is different depending on where you fall in the tax bracket. I think the last I checked, it was like 37 to 39% for the top bracket, whatever the income ratio for that bracket is. But it's not perfect. So there are a couple I would consider large drawbacks to futures, right? One of those being the margin necessary. I've already mentioned that you can trade with as little as $5, $10, $50 if you want to use those small futures. But if you want to trade anything with some meat to it, then you're going to need at least $500. And again, this changes based on your broker. But for me, with my broker, a single contract, the SPY Mini, requires me to have at minimum $500 per contract. However, if I trade off hours, I need to have $12,000 per contract. And the reason they do this is because since futures run overnight and into multiple countries' time zones, they are a little bit more at risk for global effect. So, if SPY is at 4,000 at the close of the market and at 4 o'clock, something might happen in China that night, right? Which is going to cause the SPY future to plummet by the time we wake back up. So for this reason, brokers require you to have excessive margin to cover any overnight shifts in the market. But if you're just doing straight day trades like I do, you can get away with $500 in your account. And the biggest thing, there is no max loss when it comes to a futures trade. With options, if you enter a position with $250 on your position and you go 100% red on it, the absolute worst thing that can happen is you're going to lose that $250. With a futures contract, if you put on a trade and you don't set a stop loss and you forget about it or you just don't care about it, you could come back to not only losing your entire account, but you could also come back to losing your entire account plus being margin called. There is no max loss when it comes to a futures trade. All right, so here's just a couple little trades that I made with a couple different brokers, just to show you what I was talking about when it comes to different futures showing like a different P&L range, right? So this is the ES. So this, I went in right around here. This is the TradingView P&L tool for those of you who've never messed with TradingView. So the entry was right around here, and this was only 8.5 points of a move from there to there. Right, these are 15-minute candles. I believe this was one contract. I think this was one contract, but that's a $425 move, right? So let's go to the NQ. Now NQ and ES move very similar, right? Almost identical shapes. However, the NQ moves in a much higher price range. So if we look up here, the SPY was in the 4,000, right? 4,020, 4,019, etc. For this one, the NQ is in the 12,000s, almost 13,000s. So each candle of the NQ is packed with a lot more points and a lot more ticks than it is on the ES. So that exact same move on the NQ was worth $940. So this is why it's incredibly important to figure out which futures market you want to trade, because this was the exact same move, exact same strategy applied, but almost twice the profit. Now, of course, it could have resulted in twice the loss too. So that's something to keep in mind. Let me see, which video was it here? Not that one. I think it's this one. Yeah. Hold on, let me get it. So like I said, this was so you're going to see 3 trades in this video. This was during FOMC meeting last week. The first 2 trades, all 3 of these trades were done on paper, right? So I didn't actually lose any money on this. I only did these to show you how fast profit and loss can occur with a futures trade. So the first one is going to be a trade to the downside that I profited on. A second one is going to be one that I purposely took as a loss. That way, you can see how fast the loss is, right? And then the third is going to be an actual winning trade that I took based on my trading strategy, etc. Well, I see some chats come in. I'm trying to figure out how to view these. How do I view these chats? I saw them pop up and then they disappeared. Help.
So
I
if you
need
look,
adults.
if you look in the top right hand corner, you should see a little chat icon. I am gonna screenshot to you where it is lifted in your DM.
Oh, I see it. Show chat. Got it. Sweet.
Perfect. Okay.
All right, cool. I didn't even know that was there. Oh, damn. I didn't even see all these chats coming in. Shit. Hold on. Let me backlog. I think I missed some stuff. Let's see. Let's see. Huge difference in minimum. Yeah, there's a massive difference. And like I said, that's because when you trade during market hours, you're basically trading your time zone specifically. Once you go into the after hours market, you're dipping your toes into the entire world as far as what could potentially happen to your position. I would say working futures would be less risky than options. It can be, and it kind of depends on what your definition of risk is. If you run like a YOLO position on an MES contract, then I would say that it's more risky than futures. Because you can go into some options very modestly. I've entered options with as little as $80, came out with 200% and doubled my money. So it just depends on your strike choice and your contracts and the options, trying to compare them. Set stops. Yeah, definitely set stops. I would say that setting stop losses with option or with futures is at least twice as important as it is with options. Because it can quite literally melt your entire portfolio. Options are, yeah. Can you still set stop loss and target gains and losses? Yeah, you can. And you'll see me do it here in this video I'm about to show you. Every broker is different as far as how you do it. This is just how I do it on TradingView, which you'll see here in a second. Okay, I think I'm all caught up. All right, cool. All right, so here I'm setting my bid for the sell. I think I went 2 contracts on this one. All right, so I'm about to get filled here, I believe. Yep. So now you see on TradingView right here, this is my current P&L. Obviously, red means I'm losing. Oh my God, quit texting. Sorry about that. I didn't mute that phone. So this is all live. It was live when I recorded it during FOMC. So you see this green line? That was my take profit line that I went ahead and pre-created. So it will automatically exit me out once it hits that mark. And you can see FOMC literally one whisper of, Jay Powell, and it pushed me up $175. And that's it. If you blinked, you probably missed it, but that was a $525 trade in 12 seconds. So here in a few minutes or a few seconds, probably, I'm about to enter a trade that I know is going to lose, just to show you how fast a loss can occur. And also, I know I've said it a couple times, but keep in mind, this is FOMC, right? The whole market goes crazy during FOMC. You may not necessarily see this kind of volatility during regular trading hours, especially if you have a solid strategy, solid stop loss, that sort of stuff. So here I was targeting this bottom this low just for, shits and giggles. I wasn't actually expecting this trade to hit, but look at that. I'm down 1,000. This is off of 2 contracts. $1,700, $1,900. And here shortly, I'm just going to cut it because obviously I've made my point by this point in the video. And I've got one more video that I recorded showing the kind of movement you would expect during normal market hours, not FOMC type hours. All right, so here I'm actually going to set a trade for the strategy that I use. So for my strategy, I'm trying to play a break off of this candle here. This is called a 2 down, 2 up reversal play, right? So I'm going on the break of here, and I'm targeting the high of this candle. That's called my most recent magnitude. Now let me fast forward through this news here. Okay, so I've already hit my entry. Right now I'm down $25. Not a big deal. It's about to go green here in a second. And when it happens, it's going to happen fast. You can see my take profit up here. TradingView tells me what I expect to make on this trade if it hits, and it hits $700. So you can see how playing futures, if you're unfamiliar with the moves and unfamiliar with all the how they how they work with the market, how you can definitely clap an account. Trying to find my entry point here. All right, so here's an actual market trade. This is not during FOMC or any sort of news events, so it's going to move much slower, but it's a little bit more of a realistic portrayal of what kind of intra-market move you could do. So I've got my entry here set on the break of this 2. I'm looking to play either a 2 down, 2 up reversal or a 2-1-2, but I believe this trade ended up being a 2 down, 2 up. Where'd it go? I think I've already missed it. Oh, I went too far. Okay, here it is. Yep, so I'm playing off of here, this 2 down, going into a 2 down, 2 up reversal play. Right there, it hits my entry. Currently down $25, down 37. I'm playing this as my target. This is my target right here. Actually, no. This one I played half, so I played the 50% rule for this one. So I'm basically going for a 1-point scalp on this, which would be a $50 scalp. And there, scalped $50 out of the market. All right. Before we do the little question thing at the end, is there any clarification, questions that popped up, anything now that I know how to actually read this chat?
Nope, no questions so far.
All right. So I'm guessing you just do the questions by we just ask the questions and then they put them in the chat, I guess is how it goes.
Yes. So you're going to verbally ask the questions and then they have to answer them in the chat. The first one to get the answer correct gets the point. So have the chat open and then you ask it, and then the first one you see to answer correctly gets the point.
Gotcha. Okay. Whoop. Peter's freaking out. Hold on.
That was an amazing class. That was a lot of information. I did not know so much of that.
I actually have a quick question on that, on the number sequence that you have there. I've seen that somewhere, but how exactly does that work?
So I can do another class on that. If we got time at the end, I don't know, because I think Queen is saying you want them to classes to kind of stay for about an hour. But I can do something on that later. So that's called the strat. That's literally what's called the strat. And it was developed a long time ago, actually, by a guy that worked on Wall Street. He basically determined that the traditional systematic, candlestick, TA, cups and handles, that kind of stuff, it works, but the way he saw the market was that these were all things that were created based off of a more fundamental approach, which was candlestick patterns, and he broke the whole market down into uh, 1, 2, 3, up and down. That's it. And there's a combination of these numbers in directions that determine what could or potentially happen, because the market is all about probability, right? Excuse me. It's all about probability. So based on a particular combination, you align yourself with the most probable cause. So like here, um, this here, 2 up, followed by 1, followed by a down. So a 1 is the equivalent of an inside bar or consolidation. A 3 is an outside bar, aka a broadening formation or a range. So when you have a 2 down, or sorry, a 2 up followed by a 1, that tells you that you've ran into a bullish pattern. Now you're tightening and you're consolidating and you're expecting either a breakout to the upside or a breakout to the downside. And in this case, as soon as this candle breaks the bottom of this one wick, you've confirmed that you've broken to the downside. So you would enter puts at the break of this one wick. If it broke,
Sounds good stuff for another class. I'm excited.
If it breaks the top of this one wick, you would enter calls to the upside.
Okay, that's pretty neat. Cool. Thank you.
All right. So the first one, giving a 1-point move, assuming only one contract. The SPY mini future, remember this is ES, will generate how much money, and the SPY micro future will generate how much. And that was quick. It's B. Yep. So remember, a micro contract always moves substantially than a mini, and it doesn't matter what index it's on. Micro always is smaller than a mini. And you can note this is in the ES because it's MES versus ES. The Qs, I believe, is NQ for the mini and MNQ for the micro. There we go. What is a point of futures? What is a point? It is A. I think that was Rob, I think.
Yep, I'm keeping track of the score.
Oh, okay. Sweet. All right, cool.
You just got to make sure and tell me who's got the correct answer. I don't want to get it wrong. I'm learning too.
Yeah. Just keep in mind that whenever you trade, a future is going to show you the chart in points, but it's going to measure in ticks. What is the maximum loss potential of a futures position? A. There is no maximum loss. What are the trading hours for a futures? It is C. Futures markets are open 6 days a week, 23 hours a day, with a slight break in between the times. And I have no idea what they do in between those times. All right. So what is the margin required to open a futures contract? This one tricked all of y'all. Yep. Somebody got it. Who was it? Skeezy. D. Remember I said that the margin requirement varies not only on the instrument, but also the broker and the time of day. $500 to open a futures position during the day swells back up to $12,000 at night. And that also varies from one country, from one broker to another. TOS, Thinkorswim, I believe that's like $1,000 per contract for a day trade, something like that. All right, so what is a tick? If we've already discussed a point, what is a tick? Answer is A. Remember, a point is the equivalent of $1 move. However, a tick is the actual instrument or the actual numbers in which a future will move. Every future has its own tick associated with it, and that's something that you have to know before you jump in. This is probably going to be won by whoever types the fastest. I don't know. What do you think, Queen? I don't know who has the best answer on this one.
So 60% of it you get, let's see, 60% tax. That doesn't say the full thing. Capital gains, that doesn't say the full thing either. 60 long, 40 short, 60 long capital gains. I'm gonna go Rob P, right?
Rob P, I think, has the first technical answer. Rookie has the most detailed answer.
Okay.
Hmm.
I mean,
Well,
he
I
had
mean,
it right. He
that's
just
yeah. That's it. I give it to Rob. That's fine. Yeah.
Okay.
Split it. Everybody gets half a point.
We'll give Rookie 1, 2.
That was kind of an unfair question, but yeah, that was the essay question of the day.
Nice. So our winner is Arpoon. Nice. Yay.
So the
So
last slot. Oh, sorry. Go ahead.
oh no, you got another question?
No. It's just breaking it down to give you, because I like to. I work better with raw numbers versus percentage
Okay,
stuff.
perfect. Go ahead. Yes.
So I'm comparing two different positions here. A $10,000 profit on a futures position versus a $10,000 profit on a options trade. The $10,000 future position will be taxed $6,000 and $4,000, 60/40, for a tax of $1,200 and $1,480. The $10,000 options position, assuming the maximum bracket, is going to be taxed at 37%, meaning you're going to be taxed $3,700. So just by trading a futures position over an options position, you're going to save. You're going to have an extra loss of $1,020 to taxes just based off of the options trade. And that is the last one.
Nice. That was really, really informative. I love that it's broken down so easily understood. The videos showing us examples, that was really cool that you did that. You did really amazing. Anybody have any questions?
Yeah, let me know. Several people are typing, it says. Yeah, there's not a ton of information online, or rather, the information that you see online, um, it's kind of wordy. I think it's kind of a lot of the information online is kind of geared towards what I would dare consider to be like elite trader speak. It kind of doesn't break it down. And futures really aren't all that complicated. There's just some key important things that you have to know. As far as going and trading them, they're super simple.
Seems like everybody's saying awesome class. You covered
Sweet,
everything.
sweet.
Thank you, thank you, thank you so much. I
Yeah.
really, really appreciate you, Lifted. And
Yeah.
we have you recorded because we record classes. We have you recorded saying
Oh.
teach that strat. So you got on the hook for that one.
Oh shit. Okay.
But you did really good. Thank you so much. I really, really appreciate it. This was super informative. And now you see, why we do classes like this. You saw Rob P say, it's so hard to find information that we can actually compute and understand online about a lot of things. And the way you broke it down was amazing. Super, super appreciative.
Yeah, no problem.
All right. Well, y'all have an awesome rest of your Sunday. Congratulations, Arpoon, on your win. And thank you again, Lifted, so much. And yes, we record the classes. Frederick edits them, and we will let you know when they're ready to go.
All right, sounds good. I just put those cheat sheets up in the lounge chat.
Oh, awesome. Thank you.
Anytime.
Y'all have a good Sunday.